Today is 20th of December 2022, and welcome to this new Seldon's fireside chat, in which I will speak about very strange situation that is happening with the prices. So what we have seen for the last several months already is a steady growth of inflation, and we reached the peak in this summer, reaching numbers around 7-8%. I will not tell exact number because I'm speaking about Western world in general, about euro and US dollar altogether. In both currencies we had such a high inflation rates. What this means, it means that consumer prices are growing and growing rapidly. What we have seen also is that this growth is slowing down, but still what we see is still month over month, the prices of the consumer goods and the products are going down, are going up, sorry. At the same time, for the last 6 months or so, we have a steady decrease of commodity prices. And this is a very strange situation, right? If we would have an inflation that would be explained by a decreasing value of money, meaning there is a lot of money in the market, there is a lot of money outside, so people spends more, buys more, and due to this, the prices are going up. What if this would be a normal inflationary situation? We would have a very high increase in commodity prices, no? Because people would try to invest in something that is tangible, right? Oil, something that you can keep and store, and it will not devaluate as fast as money devaluates. But what we see is absolutely different trend. We have a commodity prices that are going down, and consumer prices that are going up. How this could be explained? I mean, I was thinking about it, and actually I haven't seen an answer elsewhere, and I was thinking about this for quite a long time. And my understanding on this is that we have lower prices on the commodities because the production expectations, or the production right now, is lower, and expectations of the production for next months is that the production will slow down. What this would mean? So the companies around the world, especially in the areas where you have industrial production, I would say Asia, Southeastern Asia, China. So these countries, they are thinking that in the future there might be a crisis, and I will come back to that later. But what they are for sure doing, they are buying less commodities in order to build new products. So the production economy, the companies, the factories, the plants, they are thinking to produce less. They are buying less raw materials, so they will produce less in the coming months. And what will that mean? That mean that we will have even lower amount, even less products available to final consumers than we have right now. And what will this bring at the end is essentially what we're seeing as well. You have less products for the more amount of money, and what we will see is higher consumer prices. Essentially, this explains very well why the prices of of the raw goods, of the commodities are not increasing, because you cannot buy oil for breakfast. You cannot buy oil instead of fridge. You only buy products that are useful for you as a consumer, and also you buy products where you can invest, um, but something that you actually can use as well. For example, things like real estate or homes. So people that have spread money would invest in homes and so on. We actually see decrease in home prices as well at the same point. So we have commodity decreases and the investment decreases. So I think that the situation is that the companies are considering that we are going into a recession, that we are going into the economic crisis in 2023. And they are planning less production. They are planning less investment. They are buying less assets that they need to produce the products. Also, we need to understand that at the same point, companies have less availability of money to buy these raw materials, because the interest rates, both in Europe and in the United States, are growing. And this means that the company has less money to invest. Therefore, they would invest less in production for the coming month. And this will bring us to the situation where we have less products available for customers. What will happen in the situation where there are less products available to our customers, to generally customers in Western world, in the consumer economies? So if you have more money and less products, you would see the inflation growing. We've seen that there were some decrease on inflation rate. I don't say prices, because we need to be very careful. The prices didn't went down. What we've seen is decrease of the speed at which the prices are going up as an effect of the lower cost of the fuel, and especially the high inflation growth at the beginning was due to these products that are reliant on fuel, especially those that need to be transported, or maybe food and so on, that went up. So those type of products will moderate the growth of the prices, because you have commodities that are that are cheaper. Therefore, we have slower rate of price increase. But then, for the manufactured products, for the products that need to be produced, and most likely produced in the countries that are not United States or Europe, that are produced in Asia, or Southeastern Asia, or in India, those products will be more expensive, because you will have less of those products available in the market. And I don't say that it will. I mean, my opinion is that we will see higher interest rates in the coming months. The Fed will keep growing and increasing the interest rate, because it will be very difficult to stop this kind of inflation, because this inflation, it's not only about the amount of money. Fed will keep reducing the amount of money, but at the same time, if there is lower production, if the factories and plants of the world, if the production of the world is expecting a crisis, is expecting that people will consume less, or they consume less because they don't have money, because the prices went so much up that they, for the same amount of salaries, they cannot buy more, or for any reason, what will happen is that they will reduce their plans for production for months and months to come. And this will bring that even if the Fed reduces the amount of money available in the market in our Western economies, if the amount of products is decreased as well, we will have increased prices for a certain type of products, those especially that are produced outside of Western economies. But we need to think about the second part of the effect. The second part of the effect is that as the interest rates will grow, and it seems the idea is to increase the interest rates until the inflation is within the goal of 2%, what will happen is that the economy of Western countries will start to shrink. It will start to decelerate, stop, and maybe decrease. And this means that we will be in a grave crisis, in a grave world crisis that will affect not only West, it will affect East as well. Because as East will produce less products, as East will be planning for crisis, as they will be shutting down their factories, thousands of people will be left without income. And that people are the poorest people on the planet. That people don't have government to save them. That people will most likely be starving. Millions or even hundreds of millions of people in the countries that are right now producing the majority of goods we consume in the West, that people will unfortunately be left without their jobs because the companies will plan for less consumption. At the same time, increasing the interest rate will bring American European economies to the stage where the economy will not be running well. The companies in the US, in the European Union, they have a very bad habit of working with very cheap money. The way that the companies are structured, they are not prepared for high interest rates. They are operating with very low margins. This is good when you have very low interest rates. With low margins, what you are doing is you are returning to the economy, returning to the people or to stakeholders the value that you are generating. Your value is essentially deposited in your shares because you sell more, you grow, and you are not leaving this part of the margin of the profit to share as a dividend. Instead, you put as much as possible into the growth. And this, what it makes is that you are growing fast, but at the same time, you are returning the value to your shareholders in terms of the increase of the share prices and to your stakeholders because you have more people working for you, you have higher salaries and all this good stuff that companies based in European Union and the US have. What will happen is that many of the European and the US companies will not be able to survive this crisis of the high interest rates, or telling it in a different tone, they will probably be able to survive. I will retract myself. They will probably be able to survive, but they will need to cut a lot of their staff that they hired, especially many of those who were hired during and after the COVID. You've seen this absolutely amazing growth of workforce, or increase or decrease of the unemployment both in European Union and the United States. You have it felt like COVID even went well for the economies, which is never could be a case, because if you stop working for half a year, it's impossible that it went well for your economy. Absolutely impossible. What I want to say is that 2023 will be hard. 2023 and 2024, and maybe until 2025. I'm not talking here about politicians, about who is wrong or who is right. It's absolutely agnostic from a political point of view. But we need to understand that the world has stopped for almost a year, and it cannot be painless. We will pay for this, and we will pay for this now. We had a small delay in order to prepare for an impact, and I hope that people actually prepared somehow. I expect that we will have this full-blown bullwhip effect when expectations of crisis will bring even more crisis, will beat us hardly next year. And my suggestion to people who is listening to me, consider what Jeff Bezos, former CEO and founder of Amazon, told. Try to get as much cash that you like, some kind of insurance cash. I don't say contract insurance. No, it's not like that. I say try to have some cash, some safe cash, not invested anywhere, that would give you liquidity during this period, during next 2 years. Nobody will be safe at this time. And again, I don't want to be too pessimistic. I still think that the soft landing is possible, and I will tell you how the soft landing is possible, how it could happen. It will happen if suddenly India and China, especially China, will start to produce even more than before COVID. If India and China will start growing their economy very fast, will start to invest heavily in the production, and will start to produce goods on an increasing rate. This will allow everyone, all the world, all the economies, including those of China and India, not to go into this crisis that we expect. But I don't think they will do this. I think they will keep the economic rationale, an economic rationale for each and every company, for each and every enterprise. If you are smart, it says brace for impact. Stop investing. It's absolutely the same what I'm talking to you. Increase your liquidity. Get some cash and store it in your bank account instead of buying commodities and assets to produce products next year. Buy the bare minimum and produce the bare minimum. This is what the rationale of these companies. And if you listen to the CEOs of the different companies around the globe, you will find that this is the message that they are saying to their employees and to the world. They say that we need to prepare for the wars, and this is what they will do. And as they will do this, and you will do this because you will listen to me, if people stop spending, and people will stop spending, we will necessarily get into big crisis. Again, there are chances for soft landing, and the chances of soft landing are absolutely dependent on the level of production of our Asian friends. But those chances are lower compared to the chances of getting the bullwhip effect and the inflation. Also, consider that the companies in Europe, in the United States, will buy less products for stock. They bought quite a lot of stock during the 2022, 2021 and 2022. Therefore, if you look at their economics, if you look at how they performed in 2022, you generally will see a very good performance. They increased their sales and they increased their margins. Why this had happened? Very easy. They bought cheap products, cheap assets with pre-inflation prices or at the beginning of the inflation, and they were selling it throughout the year and getting very good margin with the increased prices. But now they need to buy again, and they will buy according to the prices and to the expectations of 2023. They will buy less and they will sell you with higher prices, much higher prices that it was last year. Also, they will buy less for a simple reason. The interest rates will increase and they will have less financial possibility to buy, unfortunately. So this is my fireside chat for today, or fireside conversation, because unfortunately no one joined the chat. I hope you will watch this video in the recording. Again, today is 20th December 2022. It's almost 5 p.m. at the place where I am. It's a country in Europe. And as a note, I want to say you that, the war in Ukraine will go in 2023. It will still be there. But if you look, even with the decreased supply of gas, natural gas, and oil from Russia, even with this decreased supply and these incredible sanctions that European Union and other countries placed over Russian oil and gas, even with this situation, the prices of gasoline and diesel, at least in the place, European country where I am located, they came back to the same level as it were before the war. Those prices increased after pandemic because of the increase of the expectation of economic growth, and they are almost a little bit more expensive, but almost at the same level as pre-war, after pandemic, but pre-war. And with this lower supply of the commodities, we still have same prices. Imagine how low is the demand for the commodities. Imagine how less, how are the expectations of the producers. So I want to say you that yes, the war will still be in 2023. The sanctions will keep going for Russia. We don't know how the war will end, and we don't know if the war will have some sort of increased volatility in terms of war actions, if the war will spread to other countries. I don't know. I feel that there are like waves of there are waves of aggression. At some point, it seems that everything is getting calm, and then again there are increased activity on fronts, and people are starting to speak about nuclear weapons and things like that. I just want to say is that many economic crises were followed by big wars, or were avoided by big wars as well, because the war itself, it's a big crisis, but when your security is at stake, you think less about the economy. You actually can live with much less. If you look at Ukraine, people are now living without electricity. In many cases, the central heating is not working with the temperatures of -10 in the night. People are living without normal access to tap water. And I don't think that they are thinking about what is the latest share price of the X stock, or what is the increase of the prices of avocados, because they need some basic products. People are living with less and living with the basic things to survive. And when you are in this situation, the economy for you is reduced to very basic things. And for basic things, I don't think we will have a problem in the world, in the worldwide scale. So there might be a temptation to widespread the crisis. So the effects of the economy were not felt that much, because effects of other things that are much worse and much scary are the main topic. So my suggestion for you, my suggestion for next month, please stay informed. Watch news, and I know that the news are propaganda, but watch news. Mainstream media are also important to watch, because it shows what is the direction or what is the expectation of the mainstream political powers. I say as because there is, even for the mainstream, there is not only one political power. There is conflicting political powers that are within the mainstream political agenda. Then there are political powers that are outside of political agenda. I don't tell you that you need to listen to those, because in many cases it's also propaganda, but a much low level propaganda and much more malicious propaganda compared to the mainstream propaganda. Only watch the non-mainstream actors if you are very smart in terms of you have read several books about political theory, and you understand the political communication. If not, you can be very easily trapped in a very low level, very basic speech that will easily catch you, and it will be a buckle that you might not be able to get out by yourself. Propaganda is like a drug. It can actually catch you, and then you follow and you look for and you look for information to somehow prove your ideas, and you go to the information sources that are not credible to just to confirm your point. It's very hard to search for truth, and many people are not prepared to do this with the current techniques of bringing you to a wrong perception, right? The most common part of bringing you to the wrong perception or the wrong result in your thoughts is giving you many truths, many correct facts in the message, but the main message is going to be a fake, no? Or to considering that if there is some relationship between, or there are some if there is something that appears to have some relationship, that there is some specific causality, which is not the case as well. Many things may be explained by many ways, not necessarily the way that that person or that entity or that political actor explains to you. With this, I will end today's stream. Right, I don't know if someone is watching me, because I'm streaming directly from OBS. I see that no one is chatting. So if you watch this video in the future, remember that this was recorded in December of 2022, and it would be very interesting to see if somehow I were right in my, I will not call this predictions, because prediction is when you know for sure what will happen. I would say assessment, right? I have two options. One, we are going all the way wrong and into the crisis if we have decreased production of consumer goods, and this is what is happening from my point of view. Or we are having soft landing if China, India, and other players in Asia produces enough and more goods compared to what we have now. Thank you very much for your attention, and this was my first daylight fireside chat. I think it went well, and I will keep trying to do this when I have free time. I love the live format because it's somehow pre-recorded is always staged a little bit. In this case, I just turn on the microphone and just describing you the ideas that I had during the day, and I hope it's interesting and it helpful, and let's see if what I told actually is getting confirmed. Again, thank you very much for your time, and see you in the next stream. Bye.